world of finance can be an intimidating place. Where to invest, how to protect those investments, how to prepare for retirement. For every road we travel looking for answers, we're finding new, inventive ways to navigate.
When people look ahead to retirement, they need to be especially thoughtful about managing their wealth. And yet, the very process of planning for retirement seems to invite mistakes. People may wrongly assume that they will spend less money in retirement than they do now. Years later, in the midst of retirement, these mistakes can carry a high cost.
People don't plan early enough. They will spend more time planning their annual vacation than they do for the retirement. And then by the time they plan for the retirement, it's usually much later in life, and they don't have enough money accumulated to actually meet their retirement needs.
The executives at Pence Wealth believe retirement planning must be highly tailored to the individual. The firm creates a personal index for each client that considers a range of factors in answering a key question. How much cash flow will this person need to pursue his objectives in retirement? A person's cash flow needs, now and in the future, should drive his choice of investments, which also must be aligned with the client's tolerance for risk.
The personal index that we work with every client on really helps us understand the financial needs and their attitude towards risk. Someone can have absolutely the best plan in the world, but if we don't understand their attitude, if we don't understand who they are, what really makes them comfortable about their income and confidence in their wealth, then that's going to be important, because you can have the best plan in the world, but if you don't have the attitude right, you won't stick with it. You become uncomfortable, you don't follow the plan, and the next thing you know, all of the planning, everything you've done for your entire retirement just begins to fall apart because you don't stay engaged with it and follow the plan.
Pence Wealth Management builds a client's attitude toward risk in its planning and investment strategy. This creates a comfort level that allows the client to focus on generating cash flow. And, as Pence Wealth will tell you, a portfolio built to create cash flow may offer significant benefits. During dips in the market, your goal is to have the resources needed to ride out the volatility and even take advantage of it.
Markets are going to be volatile. They're going to bounce around. We're never changing that. Markets are going to be volatile. And how you react to that volatility is really important. So let's say you're at a moment when you're accumulating your wealth, and some great company, because the market's value, goes on sale. Now, don't you just hate it when something you've been wanting to buy goes on sale and it's the very day you don't have the money to buy it? Well, if you have a portfolio that always generates a lot of net positive cash flow, or you try to build it that way, well then you're able to take that money and try to buy bargains. So you're able to buy those bargains, buy on those dips, and be able to increase the amount of wealth that you're growing with.
When you understand the things many people want and need, you can get in front of consumer spending by investing in the companies supplying those products and services. These firms translate the big knowable themes into pricing power, creating the potential for excess earnings and higher dividends, higher growth, or both.
At Pence Wealth Management, we're the pioneers of a thing called choke point investing. It's a method of analysis to look at and identify which company is dominant at a particular point in, say, the supply chain. You don't really care whether it's ExxonMobil, Chevron, or Apache oil flowing through the pipeline. You want to be the pipeline that everybody's got to rent from to get their oil to where the refinery is, where they need it. So once we identify those companies that are dominant, they tend to have pricing power. They tend to be able to generate some excess earnings. They've got pricing power, they've got dominance, they typically have a competitive advantage. So when they do that, then you're in a much better position to probably have a better investment.
To learn more about Pence Wealth Management, visit the firm's website at www.pencewealthmanagement.com or call 800-731-3623.